Welcome back to the Japan FinTech Observer. Get ready for a quick hit of the latest news in Japanese finance and fintech. We're diving into the headlines, breaking down the trends, and leaving you with the insights you need to stay ahead of the curve. Let's go.
The Bank of Japan held its monetary policy meeting, MPM, over the past 2 days, leaving the policy rate unchanged and stating, the bank will encourage the uncollateralized overnight call rate to remain at around 0.25%. In addition, the bank provided its outlook for economic activity and prices, outlining the following points. First, Japan's economy is likely to keep growing at a pace above its potential growth rate, with overseas economies continuing to grow moderately, and as a virtuous cycle from income to spending gradually intensifies against the background of factors such as accommodative financial conditions. Second, the year-on-year rate of increase in the Consumer Price Index, CPI, all items less fresh food, is likely to be at around 2.5% for fiscal 2024 and then be at around 2% for fiscal 2025 and 2026. While the effects of a pass-through to consumer prices of cost increases led by the past rise in import prices are expected to wane, underlying CPI inflation is expected to increase gradually, since it is projected that the output gap will improve and that medium to long-term inflation expectations will rise, with a virtuous cycle between wages and prices continuing to intensify. In the second half of the projection period, it is likely to be at a level that is generally consistent with the price stability target. Through fiscal 2025, it is also expected that a dissipation of the effects of the government's measures pushing down inflation will make a positive contribution to the year-on-year rate of increase in the CPI, all items less fresh food, whereas factors such as the recent decline in crude oil and other resource prices will make a negative contribution. Third, comparing the projections with those presented in the previous Outlook for Economic Activity and Prices Outlook report, the projected real GDP growth rates are more or less unchanged. The projected year-on-year rate of increase in the CPI, all items less fresh food, for fiscal 2025 is somewhat lower due to factors such as the recent decline in crude oil and other resource prices. Fourth, concerning risks to the outlook, there remain high uncertainties surrounding Japan's economic activity and prices, including developments in overseas economic activity and prices, developments in commodity prices, and domestic firms' wage and price-setting behavior. Under these circumstances, it is necessary to pay due attention to developments in financial and foreign exchange markets and their impact on Japan's economic activity and prices. In particular, with firms' behavior shifting more toward raising wages and prices recently, exchange rate developments are, compared to the past, more likely to affect prices. Fifth, with regard to the risk balance, risks to economic activity are generally balanced. Risks to prices are skewed to the upside for fiscal 2025.